Hello everyone, this is Peter Harris with Commercial Property Advisors with a quick COVID-19 commercial real estate update. In this video I'm going to cover a couple things. Just give you a short synopsis on what's happening in the commercial real estate market. And secondly, in the second part of the video, I will share with you what I believe are the big winners and the big losers. Let's get started. So these three categories are very important. Rent collections, what's happening in the lender's world, and investor mentality. So real quick, rent collections. I put this in red, watch. Rent collections, I want you to watch rent collections because as the rent collections go, so does the market. Okay, so as you guys know, we have students from the East Coast to West Coast. We can keep track of exactly what's happening in each market. Now, the economy kind of shut down in March, right? And the media was predicting doom and gloom, but contrary to what the media said how the economy was doing, we collected over 95% of our rents in April. What does that tell you? That in April, our tenants still have their jobs. In May, it was 90%, still good. In June, well, we're at the start of June, but we predict over 85% of the rent collected. What does that say? In the midst of 40 million people losing their jobs, in the apartment business, people are still paying their rent, right? Now, let me bring up one other thing you probably think about is forbearance. As you know, for us multifamily investors, the government has offered us, other banks have offered us a period of forbearance of not paying our mortgage for about 3 months. Then we have 12 months to catch up because of the economy. Here's what happened. Most of us applied, nearly all of our students applied, but guess what? They were not approved because they were not distressed enough. They had their jobs, they were still collecting rents, so they couldn't prove that they were qualified for the forbearance. What does that tell you? That tells you right now that the apartment business is doing pretty well. Okay? All right, so the second category to look out for is the lending environment. What are lenders doing, right? We have a bunch of lenders nationwide. I speak with them nearly every day, right, on what's happening in their world. Well, I can tell you from all of our student closings from the East Coast to the West Coast, the lending is taking a lot longer to close their deals. Sometimes 2 times longer, right? You can't blame them because of COVID-19. They are really, just buttoning down. And they're actually what they're doing is they're asking for higher down payments. They're asking for money up front to help pay the mortgage just in case you can't pay, but the interest rates are really low. We're seeing in my state interest rates below 4% for multifamily. That's what we're seeing. So great rates, but it's just taking longer. You can't blame the banks because they are huge risk mitigators, and to mitigate their risk, they're making it tougher and they're taking longer. So get used to it. That's how it's going to be for the next few months. Thirdly, investor mentality. We keep a track of that because, again, we deal with students all across the country, and we do a lot of going direct to the consumer, direct to their property owners to see how they react to how we market to them. And we compile all that data. Let me just sum it up for you. Okay? Number one is from a seller perspective, you're not going to see a lot of price drops, right? You're thinking, oh, we're in this big pandemic and a lot of fear, protests across the nation, right? You think all of this will lead to, in the midst of recession, you think a lot of sellers will be motivated. Well, a lot more are motivated than before, but the price drops just aren't there, right? Secondly, from the buyer perspective, right, the investors in the market wanting to buy property, right, guess what? There's no slowdown there. There are still a bunch of people with money, with the intention, with the aggressiveness of making offers and buying deals. So what that equals is, for the apartment business, a very stable market. So I would suggest, if you are interested in commercial real estate, to pursue the apartment business. I have a video on how to analyze apartments, how to do your first apartment building deal. That link will appear on the screen, so check it out. All right, so next what I want to do is jump onto what I believe are going to be the big winners and the big losers. Let's go there next. Here we are, the biggest winners and the biggest losers. Now, no one can predict the future, so no one really knows what's going to happen. You can read all the diagrams and bars and graphs and articles you want, but no one really knows. We're figuring it out as we go. Now, I'm going to give you my perspective from being in the business for 20 years. Okay? So, number one, I believe the biggest losers are going to be those sitting on the sidelines with cash, but doing nothing when the dust settles. So those of you, if that's you, you're going to look in the rearview mirror and you're going to look years back and see that you've missed the biggest buying opportunities since the Great Recession. That's what's going to happen. Now, in terms of the biggest losers properties-wise, I believe that the office owners and the shopping center owners are going to suffer the most. As you know, most of us are working from home. A lot of us have remote jobs now. Online shopping is the thing now. So a lot of these owners are suffering currently and will suffer in the future because they have their business has dropped so much they can't pay their mortgage. That's what's going to happen. More on that in a second. Now, the big winners. The big winners are going to be people that take action by preparing themselves, right? Preparing for what? For today's turmoil and for the future turmoil caused by this pandemic, right? So it is changing right before our eyes. So here's what's going to happen. This is my prediction. There are going to be a lot of people that can't pay their rent, right? Or lease payments, okay? Apartments, shopping centers, everybody, right? And here's what's going to happen. Because they can't pay their rent, the property owners can't pay their mortgage. They're going to go into mortgage default. They're going to go into pre-foreclosure. They're going to go into foreclosure, and then it becomes an REO, bank-owned property. You have to be ready for that. But guess what? That's not going to happen right away. It's going to take a year or two down the road for that to happen. It's not a quick process. So you must be ready for that, for when that happens. How do you get ready? Well, number one, you should get educated, and that's probably why you're watching this YouTube channel. But the other two things are to have your cash ready, have your down payment ready. If you don't have a down payment, pull other person's money to form a down payment so that you can buy the property. But the big picture, get your cash ready, get your finances in order, right? You have time. Secondly, if you don't have the money, you don't have experience, you don't have the credit, damaged credit, what can you do? You can also purchase commercial real estate creatively. One of our favorite techniques is the master lease agreement, which is a technique where you can take advantage of distressed owners, distressed properties, and buy their property for whatever terms you can create. Little money down. I'm not a big believer in no money down, so that's not it. Okay, little money down. You have to have money in this business. Okay, little money down, but the terms can be as creative as you can get with the seller. So basically, your master lease agreement purchase is based upon the seller motivation. I teach you how to structure the deal around the seller motivation. So watch this video. The link will appear on the screen. Got it? Okay. Property-wise, who I think will be the big winners? Twofold. I think apartments, right? Everyone needs a place to live, and let's face it, that's what I own the most, that's what our students own the most, are apartments, for a reason. They've been so stable from the last three recessions or last three episodes we have of turmoil. We've always come out shining from those periods. Okay. Secondly, as strange as it sounds, the warehouse owners and industrial property owners are doing really, really well right now, and will so in the future. Right? These guys are successful because we are buying more things online. Who's hiring right now? These guys. Right, that own these properties, and their businesses inside their buildings are supplying stuff for us online. E-commerce business is booming because of these guys, and vice versa. All right, Amazon has a company that searches for warehouses around the country, and they cannot buy them quick enough to set them up. Right, so this business is booming right now. So these two guys, right, apartments and warehouse industrial, are the big winners today and so forth in the future. All right. Okay, thank you very much. So that's my quick update. I want to offer you something here. So I have my free download here with my new book, Commercial Real Estate Investing for Beginners. So the link will appear. Go ahead and download it. All right, so I hope you enjoyed today's update. I have more for you in the near future. I'll see you at the next video.